We would like to greet you people in Singapore. You are on Economic Buzz, the English talk show program that outlook the economic issue for your business. And we are still talking about business review and the outlook for gold and oil commodity with Mr. Vicky Amarnani, market strategist, Monex Invest in the Futures. Now, Mr. Vicky, let's continue. So now, before we continue our outlook and forecast for oil and also gold, let's make a review first, maybe during 2012. First semester and the second semester now at the end of 2012. How is it, the volatility and the fluctuation?
Well, okay, if you see the first half of the year in 2012, there's been very high volatility in both gold and oil. And in fact, compared from mid-June till now, there's been a pretty decent range, which has been very beneficial for traders to be trading in and out of the market. But if you see gold performance in general, it hasn't been very spectacular this year.
Okay.
Over the last 10 years, the average gold price movement has been about 20% per year. And if you see this year, gold price moved to a maximum of about 10%, from about 1616 to about 1754, sorry, 1796. And especially from July, the movement has been within the range of about 1640 to 18 back and forth. In fact, there's a nice triple top at $1,800. So for investors who are looking to buy at breakouts, when gold breaks 1,800, that's the time to buy, not to sell. And in terms of oil price, there's been even bigger volatility in oil price because of the Middle East tensions that's been going on between the Palestinians and Israel. Okay. And we've seen oil in the early first half to drop as low as $77 because of economic forecasts cut by IMF, World Bank. So obviously, if there is slower growth, that means there'll be less demand for oil, and the supply from OPEC has remained at that position. Therefore, oil price dropped to a low of 77. But then with these Middle East tensions coming up, improving economy from China, quantitative easing, so for a weak dollar, which benefits the oil did spike up again to as high as about $110, $111. And now they're it's between a range of about $85 to $90, which is a nice range to trade. And if you ask me my forecast for 2013, we can even read it from the Energy Information Agency. They predict a range about $88 to $89.
88 to 89.
So we don't expect much move. Maybe like how I mentioned, if it's too high, there's stagflation fears. If it's too low, then OPEC will interfere and reduce the supply output to increase the price back up.
Okay, so what can be seen now from the recent maybe confidence of investors in Indonesia according to those conditions of our commodity in Indonesia, oil and gold, during 2012? How is it?
Well, the thing is, Indonesia has been pretty resilient. I mean, no economy is insulated, but I mean, the foreign, if you just see it from foreign direct investment into various sectors, besides commodities, infrastructure, and other investments, foreign direct investments increased by 23% year over year, which is spectacular. I mean, I guess a lot of money from the developed nations are coming to emerging markets, especially from Europe, the US, because nobody would like to invest over there with the high uncertainty out there in the economy, and probably the low interest rates as well. I mean, Indonesia's interest rate is very attractive at a 5.75% rate compared to the US, which is 0 to 0.25%, or even Europe, which is standing now at 0.75%. So for those purposes, there's more money coming in to emerging markets like Indonesia, which is very supportive for the foreign direct investment.
So the freeze of international financial markets won't affect Indonesia?
It will, it will. I mean, at least as of now, we do not see any freeze. And I know there's a lot of concern in people's mind about the fiscal cliff, about euro slowing down, about Greek not receiving the money, about Spain debt problems in Spain, Italy bond yields rising again. There are a lot of concerns out there in the market. China slowdown, US slowdown, all those kind of factors. US maybe being downgraded if the debt keeps on rising, and those concerns. But in my view, we're still nowhere close to seeing a fall. But yes, when the fall comes, it will be big. That's why we have to be prudent about how we invest. That's why when you see good profits on strong rallies, do book profits. I mean, don't just let your profits run until you see a big collapse, basically.
Okay, so next year strongly affected to Indonesia next year, maybe 2013, about the economic global slowing down?
That's why I said I would see the worst impact in Indonesia would be that the GDP would drop to as low as 4%.
Okay.
If there is a crisis. I mean, Europe is already under a mild crisis, but if the crisis becomes more severe, China slowdown, US impact, GDP will be at 4%, which is still much better than the global GDP of 3.3%, US growth at 2.7%, or Eurozone growth, which is like pretty much flat.
But there is a prediction that next year, 2013, the global economy will be recovered, maybe a bit.
Yes,
maybe
I
a
agree.
bit less. So how is it? I mean, the demand of the commodity of Indonesia, like gold, oil, and such, will be increased. So how is it?
Yes, I think because China's economy is improving, we see over the last few weeks, I mean more on the short-term basis, the PMI, the Purchasing Manufacturing Index, the HSBC Manufacturing Index, there's been improvement in that. And because China is such an important factor in Indonesia, it is important to pay attention on China's capacity to do monetary easing. Monetary easing is making more supply of money, so there's more money, the economy continues to sort of perform, and China can still afford to cut interest rate, cut the RRR that banks require. RRR is the reserve requirement ratio. If banks are required to keep less ratio, then they can lend more, people can borrow more, and the economy can keep on running. And that's positive for exports from Indonesia as well.
Talking about the economic growth of Indonesia, that first it's expected to grow 6.5%, but actually, fact, it's 6.3% only.
Correct.
So do you see that next year, with the prediction 6.5%, would attract more investors?
Well, see, there's a lot of uncertainty in the market, a lot of news we cannot forecast at this point. There will be surprises in 2013.
Okay.
That's why I see a range of about 5.5% growth, and a 6.5% to 6.8% growth would be spectacular for Indonesia in 2013.
Talking about the Fed, and then maybe what is quantitative easing, so would it affect it so much in the economic global growth in 2013, or maybe it's getting better? The decision like that.
Now the U.S. has implemented quantitative easing 3. What does it mean? Basically, they continue to print more money to buy their debt back, and that supports the weak dollar, keep interest rates low. That's what all quantitative easing is about. So it's like a movie. When you watch the first part is always better than the second part. Then the third part becomes so. The impact of the QE compared to QE1 is not as strong. So I mean, there is an impact, but it's not as powerful.
Yeah, talking about the U.S. after Obama elected, the fiscal cliff becomes a threat to the U.S. How is it to continue to enter your prediction about the fiscal cliff?
Okay, my tip to investors regarding the fiscal cliff would be that we have seen a nice rise in global equities. I mean, the Dow is up over 10%. Global equities are double-digit growth, and even bonds have performed well. So several investments, even like properties and other kinds of investment, have done well. So it is important for investors and traders to be prudent and book profits.
Okay.
And you will get an opportunity to buy them lower. So sometimes we worry, oh no, I'm going to chase it up because it's now coming back down again.
Okay.
The risk to reward doesn't make sense. I mean, every time I take a position or a trade, I have to see what is my risk and what is my reward. If my risk to reward doesn't make sense, it's not worth taking the position.
Okay, let's about race after this one, Mr. Vicky.
Sure.
More on the discussion about business review and the outlook for gold and oil commodity will be brought to you soon after this one. Stay with us on Economic Buzz.